There are two clips in this video, one from last night and one from today.
Let's go to Brian in Nevada. Brian.
Booyah, Jim. How you doing today?
I am doing well. How are you?
I'm good. My question is about a stock that I've been accumulating for over 3 years now. They have a top-notch leadership team, including a CEO that receives no pay or compensation. They're staged for economic uncertainty and investment opportunities of over $4 billion cash on hand. What is your honest opinion on GameStop?
Okay, GameStop raised enough money off the backs of the apes, the memes, the kitties, whatever, that they can reinvent the company. If they reinvent the company, then you're absolutely right. They have such a big war chest, they can just close all the bad GameStops, and you know what? They can open nationwide ice cream parlors.
Jim, you were right on the tape yesterday on Chewy, where you told your members to sell half now.
Yeah, well, because that stuff is... Look, the shareholder suit, by the way, on Ryan Cohen and Bed Bath & Beyond was very curious, because isn't that the kind of suit that should have been brought by the government? We also saw, by the way, this is some sort of really interesting moment we should be thinking about. Under Armour paid a huge amount of money, but it wasn't the SEC. Again, it was private strike suits. Very, very important. And Chewy... I don't know, when Ryan Cohen, when Kitty and Ryan, this is an element that is not memesters, apes, ice cream cones. Reddit must be watched every minute. I get my bulletins. A lot of it is I'll say it, silly.
Yeah.
But you need to know what people on Reddit are thinking, and you need to know what Ryan Cohen's thinking, and you need to know what Roaring Kitty's thinking. Gill. I mean, they're factors. There's certainly more factors than half of this stuff that I come in with every
Well, a couple.
Let's provide some additional context about Chewy. Chewy announced that it is repurchasing 17,550,000 shares of Chewy stock at the price of $28.49 per share. That works out to approximately $500 million. These shares are being purchased from Buddy Chester Sub LLC, which is affiliated with funds advised by Chewy's largest shareholder, BC Partners. Chewy said they expect this repurchase to close June 27th, and the shares will then be canceled and retired. So in other words, they are effectively reducing the number of shares outstanding by more than 4%. That is very bullish. It appears Chewy wanted to provide additional value to shareholders while also reducing the ownership percentage of the company's largest shareholder. Keep in mind that Chewy was founded by current GameStop CEO Ryan Cohen, and Ryan stepped down from Chewy back in 2018. Now about Keith. I have no idea if there's a connection between Keith and Chewy or not. Maybe Keith was trying to tell us something else and it was misunderstood. Or perhaps he is buying Chewy calls. Honestly, I don't know. Hopefully we'll get a YOLO update from Keith soon. And honestly, the repurchase announcement from Chewy is very bullish for the company, and so I would not blame Keith if he's trading in light of that news. Now let's briefly talk about the XRT retail ETF that's been getting a lot of attention recently because this is crazy. Both GameStop and Chewy are held in this ETF. And as of June 26th, Chewy is the most heavily weighted stock in this ETF. You can't make this stuff up. So with this in mind, maybe Keith did want us to pay attention to what's going on with Chewy. I'm now even more interested to see the FDD data on XRT once it's released, and I think it is absolutely insane that failures to deliver are not reported on a daily basis. Instead, they are reported every 2 weeks. It makes no sense that individual investors have to wait weeks just to get a data point that should be readily available to the public on a daily basis. Now let's cover where things stand as of now when it comes to GameStop. GameStop has roughly $4 billion in cash, narrowing losses, and solid leadership. Remember that GameStop CEO Ryan Cohen has refused to accept a salary from GameStop. He bought GME stock with his own money. And with this in mind, I think it's safe to say that Ryan's incentives are very much aligned with shareholders' best interests. As I've said before, I hope GameStop will reinvent its business model in a meaningful way in the future. The GameStop digital store has been getting a lot of attention recently among individual investors, and I think the store looks great. My one concern is that most gamers will likely just buy from the default store on their gaming consoles, the Microsoft Store on Xbox, or the PlayStation Store on PlayStation consoles. But I would imagine that the GameStop digital store is very low cost because they don't have to deal with physical inventory, which is a very good thing. So even if most gamers buy from the default stores on their consoles, it still makes sense for GameStop to have a digital store because it is likely low cost and it provides an additional revenue stream. That being said, I look forward to GameStop hopefully transforming its business model in a meaningful way in the future. With $4 billion in cash, there is a lot that GameStop could do. They could become a video game publisher, they could acquire a studio and create their own video games, they could do something with augmented or virtual reality, and of course they could go the Berkshire Hathaway route. Berkshire was once a struggling textiles company that began investing in other businesses that were completely unrelated to textiles. And well, the rest is history. GameStop did recently have a job listing for Director of Global Treasury whose duties include reviewing investment opportunities and advising on opportunities in line with investment policy. But last I checked, that job is no longer listed on GameStop's careers website. Did the position get filled? If so, that is very exciting. As I've said before, GameStop's losses have narrowed so significantly over the past few years, and I think it is very doable for GameStop to invest a portion of the $4 billion, and then the profits from said investments could make up for GameStop's slight losses and result in the company becoming consistently profitable quarter after quarter. Whatever the future holds, I'm rooting for GameStop, and I want them to succeed. I want the company to survive, thrive, and reinvent its business model in a meaningful way. And regarding the financial markets, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.